Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest. This is going to be a great interview, and I think it's going to be very hard-hitting and really dissect what is going on in the paper markets, the physical markets. As a result, we're seeing shortages, we're seeing high premiums, but what's going on in the underlying paper price? I think we're seeing a lot of broken markets start to surface. The oil market, for instance, earlier this week, a negative oil price. What does that say? You know, what are we seeing on the metals side? To discuss with me this all today is Ted Butler, fundamental and expert analyst on the gold and silver markets. That's what Butler Research is. His website is butlerresearch.com. Ted, thanks for coming on Crush the Street with me today.
Thank you, Kenneth, for having me.
Well, before we get into it, how are you under these circumstances? I've been making it a point to ask my guests. Obviously, we're living in quite odd times. So how are you, sir?
I'm doing well. Of all, I know this virus business has had a terrible impact on the majority of people. I have to confess, it hasn't really changed my life in many ways. I'm kind of a stick-at-home and recluse kind of guy, so it's unnerving. But I have to say, knock on wood, it's not a traumatic experience so far.
Well, that's good. Yeah, I must say it's a similar situation on this side, but it's odd how certain things come up that I wasn't even expecting. I mean, like family members or friends, the way this is affecting them. And then obviously just seeing my kids at home now all the time and having to adjust on that front and their activities all being shut down. This is a new world, a new reality, and I'm curious to see how things are going to play out here going forward. But I want to focus on the financial markets with you today. For many years, smart people that are critical thinkers have pointed towards the inevitability of a supply issue when it comes to precious metals. On the COMEX, the LBMA, we're actually starting to see events surface that are revealing the broken markets. Even oil at negative numbers, would have seemed like a conspiracy, but it's now a conspiracy fact moment. Before we kind of dive into the future of metals, let's talk about what's been happening up until now in the futures markets, the problems that we've seen leading up to this, and then the things that are surfacing that are exposing the shortages and the problems in the markets.
Well, sure. It's I think in the case, probably the market with the most pronounced retail shortage right now would be the silver market. That's the one that gets most of the attention. And the supply, the truth is that the retail supply lines, are very wide. They're always very wide. There's plenty of dealers in the system throughout the country, throughout the world. The problem is that the supply lines are never deep. Dealers have gotten away from maintaining inventories of any substance. So if any immediate demand comes into the market, as has come in recently, the supply is quickly exhausted, and you get premiums as a result. It's just a function of the market. We don't have deep inventories of anything. The world has gravitated for the last 30 years or so to a just-in-time supply basis, and what that means is the slightest uptick in demand empties out the supply lines, and that's exactly what we're seeing in silver, and to a lesser extent in gold now on a retail basis. On top of that, one of the things, probably the most pertinent thing that underlines all of this is we have too cheap of a wholesale price of silver, and it's just been depressed for so long. We're looking now at it's hard to believe, in the 5,000 years of human history, we are now at the lowest, cheapest relative price of silver compared to gold. They're the only two items that you can almost go back that far, and compare on a relative price basis. And we have silver, the silver gold ratio at, it hit 100, 120 to 1. It's still in the 100 and teens to 1 as we speak. And that's absolutely crazy when you think about it and put things in perspective, because over the last 5,000 years, for most of that time, 97, 98% of that time, 100, 150 years or so, silver and gold were basically used for the same thing. Money, jewelry, objects of value. And it's only in the last 100, 150 years or so that silver has been used extensively as an industrial item. So the net effect of this is that for almost 5,000 years, all the silver and gold that were ever mined were still above ground. And since silver came out of the ground basically about 10 times as plentiful as gold, there was, up to 100, 150 years or so ago, roughly 10 times as much silver in the world above ground in all forms than there was gold. That was the normal, the normal ratio for almost 5,000 years. But what happened starting about 100 some odd years ago is that it was discovered that silver had so many unique chemical and industrial properties and applications, like photography, or that it was the best conductor of electricity in the world, it was the best reflector of light, that it started to be used extensively in these industrial and chemical applications. And the bottom line is, over the last 100 years or so, we've used up basically 90% of all the silver that was mined over 5,000 years, to the point where we now, there's actually more gold in the world than there's silver in bullion form. There's probably about 3 billion ounces or so of gold in bullion form, 100 ounce, 400 ounce bars, where there's only about 2 billion ounces of silver in bullion form, 1,000 ounce bar form. So you would think, a reasonable person would think, that if you had an item that was super plentiful, silver, 10 times as much silver as there was in gold for 5,000 years, and all of a sudden you used up that plentiful item to where it was now, it remained less than what exists in gold, you would think that the price would respond accordingly, and that silver would be priced at its most expensive it's ever been over 5,000 years relative to gold, compared to gold. And when you look at it, the opposite is true. Silver is now the cheapest it has ever been relative to gold over the scope of history, 5,000 years. And a reasonable person would say, well, how could that be? How could silver be the cheapest it's ever been in basically the history of the world, okay, when there's less of it for the first time over that period of time? It should be the most expensive relative to gold. And that reasonable person would, be hard-pressed to come up with a legitimate explanation for why silver would be so cheap. And the only way that person, that reasonable person, could come up with an explanation as to explain, how silver could be so cheap when it should be expensive, is someone's messing with the price. There's an artificial restraint on price. I go one step further and point out the specifics. That artificial restraint on price comes from the leading commodity exchange in the world for precious metals, the COMEX, owned by the CME Group. And the answer is simple once you look underneath the hood, and that's namely that silver futures on the COMEX have the largest concentrated short position than any commodity in the world. And it's the sole reason why silver's priced so cheap. So the bottom line is silver's cheap because it's manipulated in price. I don't see how that manipulation can last forever or even long. So it's going to be just a matter of time before we get this radical adjustment when the price manipulation ends on the COMEX and the price is set free. And that could, come at any time. I've been expecting it for years and it hasn't come, but that doesn't mean it won't come. But when it does come, okay, it's going to be so shocking. It's going to be on a par with the shock that the world received as a result of this coronavirus. The landscape in silver pricing will change overnight, and it will be something we'll sit around and talk about and hopefully profit on for many years to come.
Absolutely. Well, I think this is a really good time to address what happened in the oil market. I mean, this was such a mainstream headline. Everyone knew that oil traded on the futures market for the May contract at a negative dollar figure because of severe areas to store the supply. So I think it's interesting because when it comes to precious metals, if deliveries were happening like in oil, there would be a market breakdown. But so maybe this is a good time to educate people. What is the difference between something like oil, which gets delivered, and gold and silver, which, may not?
Well, I have some very strong feelings on this oil market. They're a little bit outside the accepted thought process. I'll share them with you since you're bringing it up. This debacle that we saw in the oil market on Monday, where the soon to expire May contract traded at a minus $40 a barrel discount from $18 or so the day before on the close. It traded down like 58 dollars or so to go into negative territory. I would hold that that is basically, in spite of all the reassuring and soothing explanations that we hear that there's no place to store oil, and I accept those the fact that our oil storage facilities worldwide are near the top off, tippy top point for the first time in basically history. But to explain a $40 negative price in one day, those lack of storage explanations are just are completely inadequate. What really happened, in my view, on the NYMEX, also owned by the CME Group, the same overall clearinghouse and public company that owns the COMEX, owns the NYMEX where the oil's traded. It was simply a one-day ambush. It was an ambush of unsuspecting long holders of contracts by very devious, corrupt, criminal short holders. My best guess for the identity of the criminal short holders who prospered as a result of what I call the manipulative move to negative numbers on Monday is none other than J.P. Morgan, who is also the prime manipulator in gold and silver prices. I get this from data from the Commitment of Traders and Bank Participation Report put out by the Commodity Futures Trading Commission. The U.S. banks were probably the biggest shorts in the oil market, and basically it was just a scam, a fraud, a trick to trap and ambush unsuspecting longs. You'll notice that after closing at negative numbers on Monday, we haven't closed at negative numbers since, even though everybody seems to be expecting it. I doubt we'll ever close at negative numbers. It's one of those things that it was just such a crooked criminal act on the part of insiders at the exchange. It really had nothing to do with storage or anything. So if you have no place to store it, it goes to zero. A commodity, it can't trade at a negative number, not negative number. It's like stupid. And you know, we don't use common sense to think of there's got to be an alternative explanation. The alternative explanation is basically the same crooks and criminals that pulled off this oil scam down to minus 40 a barrel are the same crooks that have manipulated gold and silver on the COMEX for many years, decades. And I don't know if it's ever gonna come to light that this is what's happened, and that we were all sold a bill of goods that somehow negative numbers on a commodity make sense when, you know, a reasonably intelligent 12 or 13-year-old would tell you that's impossible. It's just that I guess as we get older, we get more susceptible to BS stories that are put out. And anyway, that's my take. It was all a scam and a fraud, not likely to be seen again. And JP Morgan pulled it off again. These guys do nothing but cheat people in the market, and you know, we're all suckers for allowing it.
It's so true, and it's interesting to see the psychology of the markets. The last few years with precious metals have conditioned people to expect what they saw in their immediate past. So it's been difficult for people to trust gold and silver as it's inched its way higher here because of the fact that it's constantly been slammed down. And here we are, what, a $1,750 gold price. Silver, you know, honestly hasn't done that well on the spot price when you look at how it is compared to gold, and obviously the gold-silver ratio, as you pointed out. But one thing I'd like you to comment on is it does seem on a day-to-day basis, gold and silver seem to trade with the markets slightly. We're seeing it up today, up yesterday with the stock market. So, and the miners as well. Any comments on that? Are we seeing a tight correlation between an up stock market and precious metals? And do you expect that to decouple as time goes on?
Yeah, I think a great question. I think you answered it in your intro to it, in that it's more of a function of what we get used to and we take as normal from day to day. So yeah, I would say that you know, there might be some type of loose correlation between stock market and precious metal movements, or at least that's the case in the very recent past. But I doubt that there's a cause and effect behind the whole thing. It's loosely correlated in that it seems to happen for a certain period of time. Look, it was like almost a Bible, a strict correlation that the dollar would would weaken and precious metal prices would go up and vice versa, and that was a correlation that held true for periods of time over the last few years. But when you get down to an actual cause and effect, as one necessarily cause the other, impact the other? The answer is not really. At least you can't come up with something that's that really makes sense as to why that should be. So yeah, I think it's all tied in with what you just said originally, which is that you get used to things and you kind of expect it, you don't think about it. And that's why, for instance, that we can have such cheap precious metals prices in general, and really cheap prices for silver, say, relative to gold, is that we get used to it. It becomes a part of daily life. We don't think about it too much. We don't sit there and try and figure out every day. You got a lot of things to do in life, so you don't think about every day why things are priced as they are. Okay, every once in a while something will come along to jolt us, like you mentioned in the oil, and I think there's the reason it happened was what I proposed, but most people are not going to think in those terms. You'll react to these major events. We just don't think about things too much. If you sit down and try and think things through, you'll generally come up with a much different answer or opinion than you would just by following the daily flow of prices, day after day after day.
Absolutely. And I think it goes to show that people's sentiment really have a lot to do with the momentum of the market, but ultimately fundamentals take over. And I think to a certain degree, that's what we saw when we saw the market start to crash. The failures in the repo market, and just like I said, the trillions of dollars that were lost in the stock market. So sentiment only takes us so far until something breaks in the system. I think the oil market was somewhat of a function of that as well. But I think something really positive that we're seeing is the miners starting to move. The GDX moved above with conviction over $32. And I know a lot of people were talking about that being a strong technical point, and a lot of confidence is starting to enter the mining space. And I think that's really positive here, because that's what's been lost, is confidence in the sector. Again, with these fake rallies, 2016, a lot of optimism, and it took a lot of upside in the precious metals sector, like gold specifically, to get back over this 32 mark on the GDX. So what are your thoughts on the miners here, gold miners? And then I'd like to ask you about silver as well, because silver has been suppressed here. So it's the next to move logically.
Well, I'm more of a metal guy, hard metal guy, than I am the miners themselves. But miners, on a historical basis, do appear to be incredibly cheap, relative, inexpensive relative to the price of gold right here. So it's I'm very bullish on gold, the metal, and I can see it heading a lot higher from here. And it would be shocking if the miners didn't continue to outperform as they have done very recently, because they've underperformed a long time before that. So there's a lot of catch up, a lot of momentum, as you say, I think, in the mining space. And look, there's not there can't be a gold miner in the world that can't make a big profit at $1,750 on gold. And for someone like myself who thinks that gold prices are going a lot higher, I mean, when you start to think about how well the mining companies will do, okay, in terms of turning increased profits and stuff like that, it's hard to see how they won't go up substantially. And generally, the mining companies outperform the metals, and I don't see any reason why that wouldn't be the case coming up. And as far as silver, it's because the price of the metal is so darn depressed. I mean, I'm bullish on gold. I think it's going to go up. But my God, if you're bullish on gold and you have any kind of sense of what's really going on in silver, you can see this price of silver go up, many-fold, okay, where that might be a little bit hard to imagine in gold, but silver, the price of silver can go up multiples of itself, the current price, without much changing, except the manipulation on the COMEX ending, which is not that difficult to imagine. So there, the mining companies that do mine silver, should do that much better in the end. But it's it doesn't, all directions point upward, certainly for the price of the metals themselves, and it's hard to imagine that wouldn't take hold in the mining stocks themselves.
Couldn't agree more. Let's talk about the physical bullion and the premiums we're seeing. What are your thoughts on these premiums? Is it short term? And is it something that you would suggest people beware of? Maybe wait it out a little bit before and allowing prices to stabilize so premiums come down. So general thoughts on that. And I have a follow-up question that we discussed prior to this interview that I think is interesting for listeners and holders of precious metals.
Well, let's see. When you say premiums, you're talking on a retail basis, retail items particularly for silver, like Silver Eagles, Maple Leaves, etc. There are, substantial premiums now because of lack of availability, shortage, whatever you want to call it, on a retail basis. And the conundrum there is that these supply lines, the retail dealer supply lines never really get full, okay, to where there's the dealers have tremendous amounts of inventory. That's just the way the businesses are run. It's order and replace as people come in to buy. So if silver, the wholesale price of silver finally breaks this manipulation, as it appears it might, and begins to really fly to the upside, it's hard to imagine the retail premiums disappearing or even not expanding. So it's kind of the conundrum is that there are big premiums on these retail items of silver now, but if the wholesale price starts to get going and people start to realize that this is not a very temporary thing, I could see the premiums expanding. You don't know what's for sure is going to happen. Nobody has a lock on the future. One suggestion might be if the premiums do get so excessive that you can't consider buying in retail items. There you have to necessity is the mother of invention, and you have to make adjustments. You don't want to not participate if you have spare capital in silver just because the retail premiums are high. You can work around it. You can do the mining companies like you're suggesting, or more wholesale type items of silver. Like for instance, there's generally the smallest premiums you can find, if any, on say 1,000-ounce bars. The standard unit of trade for silver in the industry is 1,000-ounce bars, and you look if the retail prices get so high that you can't stomach paying up for them right now, which is understandable. You might make a temporary deal with yourself, like, all right, let me buy some silver in the form of 1,000-ounce bars temporarily to see if these if these premiums on the retail items cool off, and if they don't cool off and the price goes up, at least I have a participation. And you can do this, with a dealer with 1,000-ounce bars, or you could do it through ETFs. I know it's a dirty word for a lot of people, but I kind of like, SLV. And so if you think the premiums are too much, then you still want a participation, you still believe in the silver story, for instance, rather than sit it out completely, even though you'd rather have a box or two of Silver Eagles, then sit with a 1,000-ounce bar temporarily. At least you have a participation or something like that.
Ted, one thing that I think is really interesting and kind of would, I guess, validate the high premiums is the ability to sell your metal if you wanted to for a reasonable price, because obviously people, understand that there's a severe supply shortage, and there's a reason why bullion dealers are charging premiums in the moment. So, what should maybe be a proper mindset when it comes to being able to sell? Should people be trying to strategically arrange future supply chains, for themselves to be able to unload their metal for the best price possible? And, I know we probably want to think a little bit more longer term here, but I think it'll go to show that, if, let's say, a bullion dealer is selling Silver Eagles for $25 and the silver price is $15, if they're at least able to get $22, it justifies, the higher premiums, the floor on where their metal is truly worth. So what are some of your thoughts on this that, may or may not justify the high premiums in metals?
Well, I think, as in most things, the rule of order, the rule of thumb is common sense. You want to have a general awareness of what the market is. If you need to get competing bids or offers from different dealers, that's a matter of a few phone calls or something like that. You want to use some common sense. You don't necessarily want to take the first offer that you get. You want to make sure that you're not being taken advantage of, etc. So common sense kind of thing. Shop around. If need be. Generally speaking, the dealer that you bought the stuff from originally would be the first place you go. But that's you can still get an idea, canvass the market, and see what other dealers are offering. One thing to keep in mind, though, too, I wouldn't be so super obsessed with what getting the best price right this moment. I don't think that this is generally the time. Well, personal needs come up, and if you have to sell, you have to sell. As a general rule of thumb, we're so darn cheap, on silver in general, to get the retail markups, that you want to put it in a sense of a longer term perspective and think of in terms of, this may happen someday when the price of silver finally breaks free, and some time has been allowed to go by, months or years, to get the full extent of the whole silver situation. So I wouldn't obsess with what prices are being offered now, unless you have to sell. It doesn't look to me like silver in general should be sold now from an investment point of view, where is it cheap or is it expensive. Personal needs, of course, take precedence. So the average, you keep the things that you have in mind. That you don't want to wait till the last minute and not be prepared, but you also want to keep the proper perspective that there's a general time to buy, and there's a general time to sell. This is not a general time to sell. This is a time to accumulate and buy. So I'd concentrate more on that depending upon one's particular needs or whatever. Good thoughts, but I would hold them in abeyance for a while longer, quite a while longer, and certainly a much higher price.
So true. And, it is truly, it would make more of a difference now while the prices are where they're at. But look, if we're talking about a $50 silver price, for those who have been buying now and for the last few years, you're not going to be really worried about getting $50, $55, or, $53. You're going to be so deep in the money. Selling for spot is going to be a great price to unload your metal. And that's what I truly believe will happen. And, I think we're going to go much higher than silver's all-time high, hopefully in short order here. So yeah, as we close out this interview, Ted, I know you're pretty optimistic about the price of precious metals here, as am I. What are some realistic price projections that you would be comfortable with? Nothing like pie in the sky or really crazy, but just something where you say, you know what, if it got to this price, I'd still hold my gold. I'd still hold my silver, because I still would think it's undervalued. What's a reasonable price projection for some of these metals?
Well, that's probably the most difficult question to answer. I would look. It's going to be much higher than it is right now, to my mind, before I'd start to feel comfortable. And I would also build into whatever selling equation that one might have, that things have certainly gone lower than most people would have expected for silver and a lot of other things, but for silver over the years, and chances are it's going to go a heck of a lot higher than what we would think. So maybe you want to first of all think of not just one price, but a scale kind of a basis. You're not looking to hit a number, and the odds of you hitting the top or the bottom are so darn remote that you really shouldn't even think of that. So think in terms of scaling out, just like people probably scaled into and bought silver over a certain number of years. Think of selling on that same basis. And this way, if you sell a portion on the way up, rather than the whole thing, you can dollar cost average on the way up. What I would be looking for is not so much price. It's a big price, 50, 100, 200. You come up with any number that you could come up with, and I'm going to look more towards the underlying conditions that are prevailing at the time. For me, it's kind of easy. I think the silver is manipulated by a number of large banks that have sold short on an uneconomic basis and have kept the price down. So the first thing I'll be looking for is, are these crooks still doing that, or have they stopped doing it? Is there no longer a concentrated short position in the market that is artificially depressing the price? As long as there is a high concentrated short position, I'll be much less inclined to think that the top has been hit, than I would otherwise. So I'm going to look at underlying conditions, allow it, room to run, but I want to see the evidence, that silver, for the first time in any of our collective lifetimes, is no longer manipulated in price on the COMEX, and while the price will be what it'll be, and it'll be a crazy high price when that occurs, I'm going to be looking for those underlying conditions, telling me that this thing is no longer manipulated, as my general rule of thumb as to when might be a time to sell. So I'm not going to look at it so much with price. I'm going to look at what the crooks are doing. Did they finally give the ghost up on keeping this price down?
Yeah, and I appreciate that. And I'm sorry to put you in that spot where, I asked that question, but it does extract things. And I think that was a great response and a great insight on what to be thinking about when it does get to these higher prices, because, people are going to be asking these questions. And that's why I like to talk about, selling your metal, not now, but when things do get into this environment, the psychology, are you going to be able to sell when it gets to these higher prices? Because what happens in these rip roaring bull markets, Ted, is people are hesitant now about buying, and then they go all in when it's at the top. And then they, instead of making money in this environment, they lose. That's what ends up happening. And that's what I want people to start thinking about now, and not be a deer in the headlights when these markets do what they're going to do. So I'd like to give you an opportunity to share some closing thoughts, maybe respond to that, and also tell people about butlerresearch.com.
Well, I don't think I can add much to what you said. Basically, you want to kind of go against the crowd, kind of go against your own emotions when things are most depressing, and you just can't handle the low price. That's generally the time to buy. And when you feel euphoric and happy days are here to stay forever, is probably the time you should start thinking about selling. So I'm with you on that. As far as my service, it's a twice weekly service, essays, articles on what's going on silver, both on a short-term basis and a longer-term basis. And it's just another outlet for someone, for food for thought. I offer it on a monthly basis. If, either you'll like it or you won't like it, or it'll be under your thinking or over your head. It can be worth a try. It's like you'll get a straight, honest take on the market. Whether it's correct or not will be determined by future events. But you can go to Google and go to butlerresearch.com. There's plenty of free articles that you can peruse before you decide to take a plunge. But thanks for the opportunity.
Ted Butler, everyone. Ted, thank you so much for sharing your time with us. It's greatly appreciated, you being on the show and just sharing your thoughts. So everyone, check out butlerresearch.com. And Ted, thank you so much. We'll talk to you very soon.
Thank you.